I started the recording. So, welcome everyone. My name is Jay. People also call me as JRT. I'm the founder of Help for People community, which conducts or does things like helping four people. The idea behind this community is we help four people and expect, and hopefully, those four people help another four people and etc go along. So that's the idea behind this community, and as part of this community we have conducted one session already on how to save money and protect yourself from inflation. Hopefully you all had a chance to view the YouTube videos and able to share the tips and suggestions shared in the Facebook and WhatsApp community. And this is a second session that we are conducting. And joining me in this session is Kartik Balu, who is a fellow community member. And he has been in this investment journey for quite some time. So I thought, why not have the expert speak? So we have two of us presenting today. And just before we start, let me share my screen. Just give a tick mark if you are all able to see, or just confirm me if you are able to see my screen.
Yes, sir. We're able to see.
Just see if I can video panel. Yeah. I have hidden the video panel, and hopefully you are all able to see. And a small request, if you can be on mute for the initial 15 minutes, and then we will open for questions. I believe a lot of people would be having a lot of questions, clarifications that are needed. That we will take it after the initial introduction session is over. So this is how the session is going to be. We will take the first 15 minutes to walk through the slides, do our justice to what we can do to give a small introduction about investment in Australian and possibly US and Indian markets. And before I start, you would have seen this in a lot of videos, YouTube videos, a disclaimer. We also want to call out the same disclaimer, but unlike other YouTube personalities, after putting the disclaimer, we are not going to give you any stock recommendation. This is absolutely an educational purpose only, and the content that we have prepared and the contents that we will also be answering is purely educational purpose. Absolutely nothing specific to any specific stock or any specific commodity or any trading related advices will not be given. And we also not intend to continue give even after this session. This is purely to after understanding the needs of people who don't have an idea but want to get into stock market and join the journey which we are all seeing in the market, and that's the only aim for this session. And before I hand over to Karthik, stock market is something is not for everyone. This is something you should be prepared to invest in only the money that you can lose. For example, if you're putting in $1,000 and you're putting that in stock market, only do that if you are ready to believe and accept that $10,000 may not come back to you. So do not put any of your emergency saving funds or your education funds or any other funds. Just repeating, this is not for using your emergency funds putting into stock market, right? So that I will hand over to Karthik for the next 10 minutes to quickly give an introduction about the investment, and then I will take over. Karthik, over to you.
Okay. Thanks, Jay. Okay, I'm sure we have people here from all aspects, people who don't know what is stock, or people with just basic understanding, and people already in the game. So for people already in the game, this may be very basic, but that's the purpose to start with basics for the uninitiated, as Jay said. So also Jay wanted this to be interactive with the question and answer session. So I'll be talking less, not more than 10 minutes, and you can park your question and can ask at the end. Okay. So before going into stocks, let's talk on the importance of investments. So Jay, can you move to next one? Okay, don't worry about this number. So what I'm trying to explain here is this I have taken for a few of my Indian friends, so I just put in rupee terms, but that's not important. So the main theme that to get out of the slide is suppose a person who gets salary of 50,000 per month, that is 6 lakh per year, and he has a yearly expense of 3 lakh 60,000, and he retains cash 2 lakh 40,000 at the end of first year. And if he repeats that for 20 years, assuming that his salary increases at 10% every year and his expenses increases 8% every year in line with inflation plus his lifestyle change. So at the end of 20th year, he, he will be having 1.7 crore of cash. Okay, so that's the number that just remember for a few seconds. Jay, can you come to the next slide? The same person, instead of just retaining cash here, if he invest that cash in an investment, say 12%. I have taken 12% because that's the average Nifty has produced in last few years. So I just taken this number 12%. So if he does the same thing for 20 years at a 12% investment, he will be having at the end of 20th year 4 crore or 4.3 crore. Okay, so few maybe in stock just for fun, or others maybe just in this boring stuff, growing their $100 into $112 per year. But that boring 12% becomes a big number at the end of a 20th year that you can see. So this 4.3 crore, instead of having in cash, if you invest in stock market, that's the corpus that you'll have at the end of a 20th year. Even if you want to be safe after 20 years, you just park all this corpus in a very safe fixed instrument at 8% interest also, that will cover more than his expense. So you can see in the last line at the end of 20th year, his expense will be 15.5 lakh, but even putting this at 8% in a safe instrument will produce more than 32 lakh. So that's the importance of investment than saving. So
In progress.
so
Can you all please go on mute so that we can finish this off quickly?
thanks, Jay. So why invest? Just a few compelling reasons. Obviously, to fight inflation. Your $100 just parked in a rack will be just $100 next year also. But the item that you can get for $100 this year will be more than $100. Say 188% is inflation. So you need to grow your fund more than the inflation. So to fight inflation, we need this investment. Second thing, create wealth. So you by investing, you can have a corpus with a defined period in time, example for your retirement or for your children education, marriage, etc. And also investment is needed for other financial desire. Next slide, Jay. So this is a snapshot that taken from Bloomberg. This is a snapshot for the last 10 years, and it talks about a few assets like Australian share, international share, fixed interest, property, and cash, and their performance every year for past 10 years. As you can see here, see green is the asset that performed well in that particular year. So you can see Australia out of 10 years, Australian share was performing well for 1 year, and the international share for 4 years. So in total, shares performed 5 out of 10 times. If you take Australian listed property, it has performed 3 times in the last 10 years. So that means investment, either share or property, they performed well 8 out of 10 times compared to other assets like cash or fixed interest. So it's obvious that definitely investment will perform better than just parking your money. Next slide, Ajay. This is just another graph representation. If you invested 10K in 2002, after 20 years, that first dark green line is international share. So your 10K would have grown around 55K, and Australian share would have grown just below 50K. So you can see those two are best performing for the last 20 years. And Australian property, listed property would have just grown to 30K. 10K would have grown 30K. So this is again another proof that investments perform better than other instrument, especially shares perform better than all the investments.
Yes, sorry, Karthik. Which items have performed better
Can
in?
we hold on the questions? I'm sorry, I'm not
Oh,
sure
sorry.
who's speaking. After 15 minutes, we will take the questions.
Oh, sorry. Thank you.
Okay, thanks, Jay. Okay, so we just seen a high level snapshot of a different investment, but everyone will be biased or interested towards a particular kind of investment. It can be a property, or it can be stocks, or it can be risky other things also. So before choosing what kind of investment, you just need to see what's the investment and goal short term. You just need to create a short, medium, long-term goals. Be realistic. Realistic in the sense, on an average, as I said, a stock market has given 12% returns, and Australian stock market has given 10% return. So that means your $100 will grow into 110 or 112. It will not grow, 100 will not grow into 200 in a year. It may be possible on a particular or individual stocks, but on a whole stock market, it may not happen like that. So you need to have a realistic goals to avoid a disappointment. Come up with a strategy to achieve your investment goal. And investing is what it means is you can acquire knowledge from others, but don't blindly follow their tips. Many people may give tips that this investment will become 2x, 3x in 1 year. If that is the case, everyone can get money at least as a debt from a bank, invest 1 million and make into 2 million, 3 million in 1 year. So that's not possible. So just you don't blindly follow tips, just acquire knowledge and do your own due diligence. Next, Team J. Okay, now coming to stock market. What is a stock market? It's just a marketplace where publicly traded companies are bought and sold. So like going to a supermarket, we go to stock market for buying shares, and stock market just to facilitate a transaction. So if you are a buyer, it finds a seller for you. Next one, Jay. Okay, so different stock market. Here it's Australian Security Exchange, and in India, we have two indices, Nifty, which comprises top 15 companies across diversified sectors, and Sensex, it's top 30 companies across a diversified Sensex. Here, the most common index is ASX 200. Dow Jones and Nasdaq are index of US, especially Nasdaq is comprises all the big companies like Apple and Google that you may see, those companies will be there. And yeah, these are all just indexes, common indexes are done by most of the people. And the advantage of stock trading, potential for returns. As we have seen in the initial slide, compared to other investment, the big potential for returns is there in stock, and it gives a diversification. So instant diversification with the stock trading, you can diversify your investment across companies and across industries, reducing overall risk. You don't need to concentrate in a particular industry. So with whatever money you can have, there is a chance to diversify your investment. And the liquidity, you can buy and sell anytime. The exchange will happen fast, unlike others like a property market where you need to wait for days or weeks. Here it will be quick. So if you want money, you can sell and get the money. And the transparency, public traded company are required to disclose all the information, so you know everything about those companies. And flexibility, there are many investment options like buying individual stocks, exchange traded funds, or mutual funds or managed funds are available in stock market. So it gives you flexibility. Next one, Jake. Yeah, This one just to touch on difference between ETF and managed fund. Don't no need to worry about this. It's almost same, just a subtle difference. ETF mainly tend to follow index that is a passively managed, like ASX 200 or Nasdaq. Nowadays we have theme-based ETF also, like artificial intelligence, cloud computing, etc. It follows a passively managed trend, example index, and it's listed on stock exchange. Managed fund tend to be actively managed. The fund manager will select individual stock. It can be there can be a passively managed fund also. This can be listed or unlisted. So it's like a mutual fund that you here in India. So that's the subtle difference between these two. And important advantage of a ETF, it offers an instant diversification and the fees are lower. Example, if you want to buy Australia 200 ETF, you don't need to individually pick 200 companies. It will be difficult to maintain, as well as you need to pay fee for all those 200 companies individually. But with the ETF, with one single share, you will get this bouquet of 200 companies in single trade with a lower fee. So there we have listed a few important ETF, but there are a lot of ETF available.
Right.
Okay, with that, I will just hand over to Jay.
Right. Thanks, Karthik. So as Karthik said, he said it's a big stock market, and my thought, specifically as a personal example, like 1 or 2 years back, I thought stock market is something for a very large investors who has a lot of money, and it has a lot of complexity and a lot of fees. That's when I realized and said that stock market is not for me. And while I didn't have the knowledge about other things that existed. I didn't know that if you got just $10, I can go and invest and buy an Apple share. It was unbelievable. It looked like a scam. Like you could have seen it like who can buy a Apple or Facebook or an Amazon stock for $10, and that was my conviction. And then when I went through along with some guidance from a lot of people, including Karthik, then I realized that there are so much. They have made trading so easy now. So if you have an app or if you have a normal laptop, you can just open an account, trading account in less than 10 to 15 minutes. And when with bare minimum of just $10, like you don't need $1,000 or you don't need $2,000 to buy an Apple stock, you can start with $10. And what I have done is I have put a comparison of a lot of brokerage apps that are currently available. It has grown so much, and we got a lot of apps. And again, when we have a lot of apps, the question comes like, are they genuine? Are they some scams? Particularly with a lot of apps personating stuff. But these are the comparisons that has been made based on the uh, stability of these apps and the companies that are managed. I have put this together. There are two types of trading platforms. One is chess sponsored. Chess sponsored is something like, as an example, I will pick up possibly Stake and Comsec. These apps are chess sponsored, means even if tomorrow Comsec and Stake runs away or become insolvent, whatever you invest will be with you, because chess is basically like these are just brokers, but the actual share that you bought with the exchange will be on your name in the exchange. So tomorrow you can just go out to the exchange and buy that share. So, but there is other type of brokerage app which is following a custodian model. Means they are not chess sponsored, but at the same time, they are still regulated by the financial authority. But instead of being an individual share, all your shares are held in the name of a trust within that brokerage. So even if something goes wrong, there will be some difficulty in accessing your stocks, but ultimately you may be able to recover either most or complete stocks from those apps, right? So fees perspective, there are a lot of options available. Some of you may be very just getting introduced into stock market, and some may be doing already a very large trade. So depending on your usage, you can do this comparison. You can use a comparison facility. I will share the slide later. After the session, you can make a comparison, but most of the brokerage for Australian stocks starts around $3 with stake, and some go up to $9.5 for the self-wealth. Again, the cost is varying because it could be for different extra features that they are giving. But again, my suggestion is you have to do your own due diligence, what platform you want to choose. But if you're someone who just have spare $10 or $20 per week or per month, then you can do something that goes with a very low brokerage. And if it is chess sponsored, that is good. If not chess sponsored, you can still go ahead with the other apps. So the power of compounding is huge. So what Karthik showed, $100 started in day one or a year one, could have become $1,000 or $2,000 without you doing much. Like you don't need to put $50,000 and expect the stock market to give you 100% return. You can start with $10. And that's the one thing I wanted to educate or create that awareness, that this is something very easy to enter. But again, as I said, based on your financial situation, choose what type of investment. Do not put any money into stock market out of your emergency expenses or your personal expenses. Put the money only that you can afford to lose. So this is with the Australian stock market. And same thing, my thing is very difficult to get into US market. Absolutely nothing. With the same $10, you can buy a share. US allows a very unique concept. You don't need to buy a full share. For example, Apple is trading around $190 as of today and yesterday, but you don't need $190 to buy Apple share. You can buy that Apple share for $10 and you will be getting around 0.05% of the Apple share. So when it means 0.05, as I said, it's a custodian model. So if tomorrow Apple gives $1 dividend for each of the stock, you will be getting around 5 cents as a dividend. So I have also shared one thing you will remember if you follow me. I also run the savings thing. So if I give an option of don't put any money into any stock market, anything, but if they give free stock, free money just to open an account, that's something I have filtered and put it in. And if there are other people who also have a similar offers, please share it with the community. So these are something that will give a start. So for example, Spaceship is one of the managed fund. It's like a mutual fund. So you pay $5 per week or $10 per week into the through the app, and they will buy shares and add it to your account in the form of a units. Self-Wealth, Superhero, and Webull are all normal stock trading platform which allows both US and Australian stocks. But there are a lot of offers available. These are the current offers, but the offers keep changing. For example, Webull, you just open an account and add $100 or $200 to buy a share. You don't even need to buy a share. Just add $100 and fund it, and they will be giving $40 to $80. And if you do a share trade, for example, you buy one Apple share for $10, they will add another $50. So if you are absolutely someone very new to stock market, do not put your money. Just open one of the apps, sign up, use the free money that they give, watch how things are. There will be a lot of news, a lot of notifications that you'll get in the app, like how the particular share is performing, how the market is performing. Then you'll get an idea like whether it is really for you, right? And the only thing is, do not put your money, just use the free money that they give. And if you're someone like a trader, Self-Wealth is another one that gives 10 brokerage. That's close to $95 for free. So you can do 10 trades and absolutely pay no brokerage. And again, the another advantage is there are at least 25 apps. If you are someone disciplined, you can go with just one app, put $5 or $10 per week or per month, or even per year. Just $10, put it and just forget about it, or keep watching it every year or so. Or if you want to do something on a regular basis, choose a brokerage platform that is appropriate for your use. And Karthik, you want to take this?
Okay, yep. Okay, it just to give an idea how to start constructing a portfolio. This is just one of these strategies. You don't need to follow this. You can have your own. Just this for starting for the uninitiated. Just start with a small amount and don't go into one bulk investment. Just divide your investment, say by 12. If you can spread over the year and invest regularly, and just start with building blue chip companies that will protect your portfolio in case of any disaster or a downfall in the market. Then slowly build up a satellite around your core portfolios. Satellite in the sense startup, newbie, next gen companies, etc. The main thing is sleep well. Don't lose your sleep after investing in stock market. Don't try to time or betting on riskier assets. Next one. Okay. One main thing is a dividend. You would have heard this word many times. So people who don't know, dividend is just a portion from a company's profit paid to shareholders. Shareholders are nothing but they are owners of the company, usually once or twice per year after announcing its results. So dividend yield is nothing but uh, dividend relative to the share price. So if a company trades at $100 and if they are giving $5 dividend, that means it's a 5% yield stock, dividend yielding stock. And the dividend can be declared as a fully franked, partially franked, or unfranked. Again, this is a very good concept in Australia. Franked means the company pays a tax on the dividend at 30%. So if your tax rate is 30%, then you don't need to pay tax for the dividend. But say, for example, your tax rate is 33%, then you need to pay only 3% extra. If your tax rate is below 30%, say 20%, then while filing tax returns, you can get that 10% back. So that's the frank. It can be fully franked or partially franked also. And many companies have dividend reinvestment plan. Instead of getting the dividend into your account, you can reinvest that dividend in the same company share. Example, in the above example, company gives $5 and if you get 20 times, it will become $100 and you can buy the company's share. You can just reinvest the dividend to buy the company share. Extra.
Right. Karthik, I think we got only 9 minutes left, and I think we covered most of the stuff we wanted. So this is just an
Yeah, I think
example
that's
of
the
dividend
last
history,
slide, I guess. Yeah.
right?
Yeah.
And the tax, again, it's a normal, like whatever gain you make, you make a $50 profit, you pay tax on it, whatever the current tax rate is. So quickly, just summarizing what we just did. So risk versus reward, and we also understood what is investment, why it is investment needed, and starting small, diversify the investment. Don't put it on one stock. And Nvidia, as an example, has gone to $880. If you just buy one share and tomorrow it goes to 600, don't cry that it has gone. You lost the money. So take your bet based on your appetite, based on your spare money. I keep repeating spare money, but the money you are prepared to lose, right? And update. The one thing is, if some ensure that whatever account you open, you always add a nominee. So in case something unfortunate happens, whatever the money that you have saved goes to the right people in your family or surrounds. So I will share the pack. This is a community, and we will keep the community open, and we will organize more such sessions based on the community interest. And if needed, an extra session on stock marketing or investing. We got both the WhatsApp and the Facebook community. And thank you so much for joining. And we got 8 minutes. We will open for questions now if any of you wanted to clarify.
Yeah, thank you. Thank you for this session. It was really good and helpful, informative. Thank you for that one for both Karthik and Jayaraman. Thank you. So one question that I had in my mind was that when we are investing in ETF, those ETF options also say if I am remitting out of the ETF, then would that be taxable? I mean, I tried to research it, but I was not able to find anything on that concrete. Any idea on that one?
Yep. Anything that you buy, or sorry, anything that you sell after you bought, if you have made a profit, you will be taxed. Either it is ETF or stock or managed fund, anything. So you made a $20 profit out of 200, you pay tax on the $20.
Yeah. Okay.
It will be added
And
to
there
your
was one.
income.
Yeah. Sorry. Carry on. Carry on. Sorry.
Yeah, it will be added to your income. So if your income is say 60K and you pay tax on the
Mm.
60K and you got a $100 profit. So your income will be $60,000 and $100 and you pay tax on that total amount.
Okay. Yeah, Karthik was showing one slide where he was comparing different types of items like the investment property schedule and there's a graph. I'm not sure. Yeah, what are the two items that have gone up to 60 and 50? What are the two? I can't really understand. Is it Australian shares or international shares?
Those are international shares that has gone really high, and Australian shares are close competitor, like 60 to 50.
Okay. I know you won't recommend, but how do you think that ETF can help me invest in Indian stocks also, like from sitting in Australia, that or I have to use an account in India again?
No, no, no. We got ETFs that track different markets, and there are also ETFs that track India, US, Hong Kong is another market, Japan, China. So every market there is an ETF. ETF is basically kind of a mutual fund, what we used to see. So
Hmm.
we some company like Vanguard or someone manages that ETF, and they have their own team based or portfolio based. Some are based on US, some are based on India. There are a lot of ETFs that track Indian market also. So you are not buying Indian stocks, you are buying an ETF that is investing. So
Okay.
it's all Australian
Oh,
based.
okay. Yeah.
Right. Any other
Yeah. Thank
questions
you.
anyone got?
Yeah, I'll just go. Thanks, Karthik, and thanks, Jairam, and really, thanks for organizing this session. If we don't have any idea about where to invest, what to invest, but just want to start something initially and then see how it goes, what would you recommend? Is it an indices, or is it a futures or options? There are so many things in trading, right? I understand like shares is a long-term thing. You have to wait for a few years, but if you want to invest something small, people say you can do something in futures or options or, forex trading. But which one would you recommend to, just to say, give it a go and see how it works?
When I hear the word futures and options and forex, I will run away. So a lot of people have lost everything,
Mm-hmm.
lost
Mm-hmm.
being a millionaire to zero because of those things. And again, I'm not
Uh-huh.
recommending or anything, but those are something for people who have got a lot of money and people who are willing to lose, take that bet. So if you
Mm-hmm.
very small amount and uh, picking a particular stock is depending on the, so you can pick today Apple to buy today with the $10, and tomorrow Apple could become $1 or $20. So it's a risky from stock perspective, but at the same
Mm-hmm.
time there are spaceship as an example is a kind of a
Mm-hmm.
fund. So you give them $10 a month or a 10 week $10 a week. They
Mm-hmm.
decide, they have their own portfolio just like that. Each of the portfolio they track multiple stocks. So for example, one of the portfolios tracks all the blue chip companies in US. So if one of the
Mm-hmm.
company, if a Facebook goes bankrupt tomorrow, you will not see much
Mm-hmm.
of an impact. That $10 could become around $8 or $9 because the
Mm-hmm.
remaining nine companies may perform well, or there is a possibility that all the 10 becoming insolvent. That's also possible, but the occurrence is very low. So if there is someone who doesn't have any idea about any stock, then
Mm-hmm.
leaving it to the experts or leaving it to some portfolios or ETF
Mm-hmm.
is another option where again it's managed by a lot of professional people investing on stocks what they think. But as
Mm-hmm.
Karthik mentioned, everything comes with the risk. So
Yeah.
putting $10 and it becoming 12 or $13, that is what we have seen over the trend over the 10 years period. But again,
Mm-hmm.
becoming $7 or $6 is very much a possibility. Particularly the market is very high now. No one
Mm-hmm.
knows where the recession is, what could happen in the next few months or so. So it's a very risky proportion, particularly if you're planning to put like thousands, 2000s or $10,000.
Mm-hmm.
Take your own call. And
Mm-hmm.
if you don't have idea, get educated before starting or putting in. futures and options, and even experts are scared about it. It's a pure betting thing, which I will not recommend.
Okay, thanks for that. In the interest of time, I'll just ask one small thing. With the brokerage, you said there are so many other parties like, CMC and few other things, where for if you trade for 10 times, they charge a brokerage fee, something, right? So do you mean to say that we invest and they would trade on our behalf, or do we trade 10 times?
No. It's our trade.
Uh-huh.
They are just a brokerage. They are just like a vegetable shop. You go and ask for give $10 and buy tomato, and they will get the $10 and get the tomato from some wholesaler and give it to you. And they take a small commission. That's a brokerage fees for giving you the tomato. So it's all you trade the stock, you buy it, and someone sells it, and this brokerage is just a middleman exchanging and takes some commission. So that commission is called the
Okay.
brokerage fee.
Okay, so they are not responsible for our profit and loss, is it?
Absolutely no. It's a company. You buy Facebook. If Facebook stock performs well, you get. So these apps are just intermediary. They're just like a vegetable merchants or a grocery
Okay.
store.
Okay, cool. Thank you.
There's one question in the chat. Can NRI enter the stock market? But this meeting will finish in 1 minute. Will it close automatically?
I think so. I will quickly, maybe I answer. You want to go, Karthik?
Okay. Short answer is yes, the NRI can enter stock market. Just that there are two accounts, or you need to create a portfolio investment account and another non-portfolio investment account for buying IPOs and mutual fund. But don't worry about all those things. That your broker will take care. But yeah, NRI can invest in Indian stock market.
Yeah. So if you are able to sign up and able to complete the KYC, then you basically are allowed to trade. And when you sell, the taxation could be depending on what kind of citizenship or things that you got. So otherwise, you are eligible. You can go and buy stocks, whichever you like. But as I said, don't lose your money.